Today's video, basically, I wanted to deal with one of the most um, essential part of trading as time frames. Is not an indicator or a wave or an oscillator. It's basically something that you really cannot do with when you're trying to trade, because time frames are more or less like they are resolutions that helps you determine the overall direction of an asset. And like I said earlier on, these are not oscillators or indicators, they are just part of us. I mean, because basically you can say time is more or less like an essential element of human life, because you can track in areas of productivity. You can literally track time as a means of measuring your wages. It's like if I wake up 8 a.m. and I go to work and I close 5, I can use that period as a means of tracking my wages. It's like if I work for 8 hours, I'm due this amount. So time is more or less like a way of determining your wage, and you can use the same or similar examples in the area of, let's say, other social productivities. Like if I go to bed at 4 a.m., I wake up around 8 a.m. Again, time is more or less like a way of knowing that how long I slept for. So it's like everything we do revolves around time. Much of our productivity revolves around time, and our social engagement revolves around time. So time is as like an essential part of us, and it's not a script or it's not an indicator or an oscillator, but you cannot talk about trading without including time frames, because time frames are more or less like your resolutions. They are it's like a way of determining the overall price movement. So on our trading chart view, you could realize that you see different candlesticks, and these candlesticks are a representation of time frames. You're given time period, because this single candle more or less is a representation of my 4 hour price action movement. So this is a whole 4 hours, a 4 hour movement of my candle is represented by this candle. Let me reiterate again. It's like this whole candle is a representation of a time frame. So this whole candle again is a representation of a time frame. This same whole candle is a representation of a time frame. This and that are all representation of the time frame. So if this whole candle is a 4 hour time frame, means 1, 2, 3, 4, 5, 6 is a full given day. In other words, for a full given day, I need 6 candles of a 4 hour time frame to form a full given day. So 4 hours, 4 hour time frame multiplied by 6 candlesticks gives me a full day. Or else I can move to my daily time frame, and all I need is just hold one candlestick to form a whole or a full day. So there's a big difference between my 4 hour and my daily candlestick. So this is 1 day, this is 2, this is 3. So these are 3 days of price action. Whereas I needed 6 candlesticks or candles to form a given day on a 4 hour time frame. So it's like there's a big difference between 4 hour and my daily time frame. And the question I ask is, how do I track the overall direction of an asset? I need time. I need time. And this is how market Cipher B solves that problem, because these oscillators, like I said, these are like your Google map. They move, or they are waves, they move, and every wave that you see is again is a representation of a time frame. In other words, for every given wave to move, it moves in accordance to the given time that you are trying to gauge the direction. So if I am on my daily time frame, it means every time these wave move, it moves on one daily movement. So if this wave will probably head towards the positive regions, it means it had moved more than, let's say, 6 times, meaning 6 days, for it to hit my positive territories. And as for my money flow to also head towards the side, it has moved almost close to, let's say, 2 days before it probably enters the positive territory. So how do you track the overall direction of your assets? That's when you have to navigate amongst different time frames to see the overall direction. So how do I track the overall direction of an asset? This is how I would do if I'm trying to trade with market cipher. I'll form or probably put my horizontal line here, sorry, my vertical line here, to track the current time period that I mean the current time period is on the daily time frame right now, and I'm on this candlestick. So overall my direction is probably heading towards the positive territory. But how can I know if I'm heading towards the positive territory? Positive territory is this: when I navigate towards the lower time frame to see the movement, then you realize that my momentum or my engine is now in the positive regions, but again, like I said, you don't need, or you just don't make your whole trading decisions primarily on just a single time frame or a single wave or a single oscillator. You have to employ different oscillators to see the overall direction, or different time frames to see the overall direction of your assets. So if you want to see the overall direction, go to the next time frame or the lower time frame to see the 3 hour time frame. Then you realize that again your momentum is now, or your RSIs are now in the positives, and probably your money flow, which is your liquid, is still struggling in the negatives. So the more you navigate amongst the smaller time frames or the lower time frames, the bigger the direction, the more obvious the direction, because like I said, higher time frames means lower movement, and lower time frames means higher movement. So it's the movement that determines the direction, and it's the direction that gives you your trading decision. So it's like I need my time to know my direction. I need my time basically to know my direction, and I need my direction to know my trading entries. So trading now becomes a directional affair and not necessarily signals and indicators affair. As you need your time to determine the direction, and you need the direction to determine your trading entries. So you trade primarily on the very overall direction of these oscillators. These are influential Google map. Like I told you, market cipher is made up of two structures: structure A and structure B. And structure A is more or less like your indicators or road signs, and structure B is more or less like your Google map. So you need majority of these influential oscillators heading towards the positive territories, meaning you are going to buy, and you need majority of these oscillators heading towards the negative territories, meaning you're going to sell. And this is basically a way of determining the overall direction of an asset. Well, I do have a training course, sorry, like I said earlier on, it's still in the pipeline, and I'll highlight almost every indicator oscillator out there and what you need to know to become a very successful trader. Is basically using a script called Market Cipher, and it simplifies everything for you. And like I said, it requires time, effort, and dedication and consistency. With time, you can literally understand how trading works with Market Cipher. And again, this is just a very short video. Like I always do, I keep it short and very simple, so that you don't really get really tired with this lengthy videos, because most people don't have time nowadays, and I always want to keep it simple and very tidy and straight to the point. And yeah, that's just a short video. Have a nice day. Thanks.